This is the Self Storage Podcast, where we share the knowledge and skills from the industry's leading investors, developers, and operators to help you launch and grow your self-storage business. I'm your host, Scott Meyers, and over the past 16 years, we have acquired, developed, converted, and syndicated over 2 million square feet of self-storage nationwide with the help of my incredible team at selfstorageinvesting.com, who has helped thousands of people achieve greatness in self-storage. Well, hello, everyone, and welcome back to the Self Storage Podcast. I am your host, Scott Meyers, and at the time of this recording, we are in the middle of the COVID-19 pandemic. And as we are all adjusting to our new norm personally, I want to once again state that we are taking this very seriously, and we are praying for all those affected by this, and in hopes that we will soon see an improvement in the current state of the pandemic and in our economy. With that said, we are in a war with this virus and with the recession, and it is causing all of us to dig deeper and to look at everything we are doing in our businesses in different ways. Well, in today's episode, I'm having a conversation with my good friend Terry Campbell with Live Oak Bank. Now, Terry and Live Oak Bank are virtually household names in the storage industry, and he and I have done a lot of business together, and Terry has been a speaker on the main stage at our Self Storage Academy for the past 6 years straight. And I'm thankful he took some time out today to talk with me about the state of SBA lending in our industry and what he is seeing across the landscape right now, as well as his best guess for what life is going to look like in the next several months and years to come. So without further ado, let's dive into my conversation with Terry Campbell of Live Oak Bank. Terry, welcome to the show.
Thanks, Scott. I appreciate you having me.
Well, no, I appreciate you being on the show because I know that you've been a little bit busy these days in the new environment that we find ourselves in.
Yeah, sure have. We've been extremely busy. The whole bank has been all hands on deck working on getting these PPP loans out the door.
Well, in the intro, I told everybody a little bit about yourself and a little bit about Live Oak Bank and how you are the nation's premier SBA provider for the self-storage industry. But if you would fill in the gap, fill in the background a little bit on yourself. I just stated that you are an owner, but why don't you give us a little bit of an update on your properties and what's going on with Live Oak in general, and then we'll kind of dive into what's happening in the market as we speak.
Sure. As far as what we've been doing is we've just been we were working before the first round of funds were actually available to work with folks to get them in the system and start processing things, and so that we could hit submit. And we've kind of been doing the same thing, waiting on the second round of funding, which should happen this week. Today being April 22nd. They're expecting sometime by the end of the week for it to be signed into law, and then the funds will be made available as soon as possible after that. So we've been, like I said, all hands on deck, 12, 15 hours a day, 7 days a week, just trying to get money out into the hands of folks who really need it. And that's kind of a snapshot of what's going on with us and at the bank. And as far as the properties I'm involved in is, I had a large one in Florida that was a new build we opened last year, not quite a year ago, late last May. And it's been doing really well. And February was fantastic. March was good. We'll see. Hadn't gotten a report on how April's doing, but all in all, it's still doing pretty good. The other facilities that were acquisitions that I'm partners in, those have been doing pretty well as well. I mean, bottom line is that as of now, revenue is staying about the same. Move-ins and move-outs are about the same. Not a ton of people are moving in as they might normally be because of what's going on out there with stay-at-homes, and people just don't want to get out and move around. But also that means not as many people are moving out. So it's good from that perspective. But we operate those facilities unmanned, so we can rent regardless. So we don't have that issue of having to deal with the manager not being there or being worried about getting the virus or spreading the virus. So all in all, as of right now, things are kind of, they're still doing fine. We're getting a few calls every now and again about, some folks that may want to get a little reprieve because of being out of work. But we're just waiting to see what the next couple of months bring, since we're past the due dates for payments to be due in April. We were all curious, how's that gonna affect everything the 1st of April? And now we're past all that. Now it'll be, okay, how are things gonna look in May? And then how are things gonna look in June? And obviously it's all depending on how fast people get back to work. But you know this as well as I do, is that this industry's always been considered recession resistant. It's not
Hmm.
recession proof. But can fare much better than a lot of other businesses. Now we just need to see, is it pandemic resistant, not just recession resistant, which we may have both here.
Yeah, and that's that leaves a lot of questions in, well, obviously many areas of the economy and life in general right now. We can point back to 2008, and this will be the third recession I've been through investing in real estate, the second in self storage, and we learned a lot of lessons through the last one, and a lot of predictors that we put in place, and we felt that obviously there would be a longer ramp up to the time where we headed into a recession, maybe a little slower burn, because it wasn't, our economy wasn't propped up like it was falsely with real estate the last time around. But then lo and behold, yeah, this pandemic, this little thing under the microscope, caused us to immediately go into a recession, and a little deeper one than in 2008, and we hit that cliff pretty quickly. In comparison to when Lehman Brothers fell last time around. So the difference this time is that we immediately jumped up to an unemployment rate that we haven't seen in a while, and we hit it quickly. And so, as you mentioned, there's not a whole lot of folks that are leaving or exiting our facilities. But due to the lack of movement, not a whole lot of folks moving in. And as we head into springtime, then we typically see a large lease up when people are just moving in general, buying and selling houses. And well, I think there's going to be a lot more folks that are sitting tight this time around. But during a recession, we know that people downsize and businesses downsize, and so. To your point, I think you're right. It's we came through April pretty well in terms of occupancy. We were up in several areas. Others were about the same, but our accounts receivable were up just a tad. But I think it's going to be 60, 90 days before the effects of the folks, the unemployment rate, and folks that will be looking to move back in with their parents, move in with each other. These concessions for rent or mortgage payments will have burned off at that point, and I think the reality will set in. And but again, I have no predictions. Our crystal ball is I don't even get it out to look at it to see. But I'm just once again, like everybody else, just kind of anxious and curious, and somewhat holding my breath to see what that's going to look like.
You may have seen this too, Scott. Initially, when all this sort of started happening, where folks are okay, you need to work from home, you need to shelter in place, and things like that. There's been some activity of folks, having to work from home, and they needed to clear out a space they didn't really have anywhere, and
Mm-hmm.
they're taking stuff to a self storage unit.
Mm-hmm.
And the college is closing down a couple of months early, so now they're going to be a longer tenant than they would have normally. So from a rental perspective, it affected us as an industry a little more positively, right off the bat. But like I said, it's wait and see how it's going to affect us long
Yeah.
term.
Yeah, we've seen a couple of spikes with that, with the colleges, and the exact same thing that you mentioned, and also there are some folks that are transitioning their space to a storage facility, which is bands are getting together, and because they can't go to any other studios or places where they were before, and so they're playing in and outside of a storage unit, and some art studios and some of those other these ancillary businesses that had run out of a self-storage facility during business hours for a few hours a day before. Now we're seeing more of those folks that are coming in. So that's supplemental, and that is temporary. But yeah, the larger client, our typical client, it'll be interesting to see what that looks like. So, well, let's transition over to. I know that you've been head down, knee deep, 12 to 15 hours a day, with the PPP loans and handling all of that. But tell me what it looks like from your end in terms of new applications coming in for folks that are looking to, well, let's start with the existing facilities. I'm going to assume there's not a lot of construction and development, although we're still seeking some of those loans from you and others as well. But let's talk about the application side. Have you been able to keep a handle on that, or are you just so busy on the other side that you haven't had a gauge for new applications coming in?
Well, we definitely are still seeing a fair amount of interest. I mean, it's kind of surprising the number of leads that are coming in even this week. I'm looking down at my notepad here, and I've got like 6 today that I need to get back in touch with. And they are acquisitions, they're conversions, they're new construction. And, we are, we're telling folks as they contact us is, look, we're definitely interested in working with you. We'll take a look at this as soon as we can. And like I said, the whole bank is kind of on this mission to take care of the PPP loan. So it's taking time from credit and underwriting and so forth. So we can't send a whole lot through right now, but the deals that should be, that are very, very, very strong deals, we're still trying to, work with them right away as much as we can. And we're still going to look at the other ones. Now, having said that, uh, we're curious to see if our credit box is going to change any in the near future. One of the things that we're looking at is loans that are actually in closing, that are supposed to be closing, and we're looking at each one on a loan by loan basis just to make sure that nothing has materially changed that's going to put them in a bad spot by going ahead and closing now. We look at things, if it's a new construction, is construction in your area still allowed? Some cities there at one point shut down even construction, but it's in most places it's considered essential. So making sure the general contractors are still good, that how are your permits going to be affected, since so many towns have furloughed people that are in the permitting office. How do you stand there? And if it's an acquisition, going to ask a lot of questions about how is it looking, how is the rentals, how are they looking, are there any delinquencies yet, how is your liquidity standpoint, what kind of income do you have? We're just asking a lot of questions to make sure that we're not closing on today that puts somebody in a bad spot. Maybe if we do get one that looks like we should hold off, maybe we'll go back and open, close it in a couple of months. It's not that we're killing the deals, it's just making sure that we're doing the right thing for everybody. But yeah, leads are still coming in pretty much regularly, and just trying to keep up with them. In fact, the rest of the team, the rest of the self-storage team, is mostly focused on doing the processing of the loans and so forth. And I'm trying to deal with, taking the calls and working with the folks up front on new deals too.
Mm-hmm. So Terry, you bring up a good point. So in addition to looking at the projects that you have that haven't closed yet to see if there's anything materially that is a change with the change in the economic climate, have you, all things being equal, has the bank taken a look at, or the SBA taken a look at making any changes unilaterally, regardless of where the facility is, with regards to underwriting? Have you dialed anything back or required anything different across the board as a result of this, or is everything still business as usual?
Well, it's kind of business as usual. We're just trying to be a little more cautious and making sure that we are, doing the right thing, that the liquidity's there, that let's say if it's a new one, a new project, as the feasibility study, let's update it if it's more than 6 months old. Let's make sure that it still is what you expect it to be. Has it changed materially? So we're, as much as we can, we're looking at it like that. But there's no big unilateral changes with us or the SBA yet. I know there's some things they're talking about doing for the SBA program that could potentially make it more attractive. But that's something they're discussing. It's not made law. I don't want to throw things out there because sometimes, folks hear it and they take it for this is the gospel, when it's just now, it's being discussed, and it could be very beneficial to a lot of folks if these changes that they're talking about making to the current program actually do come into effect.
Well, we have several projects in place right now, and everybody did take I think the banking world took a collective pause and held their breath for a little while, and then at least started entertaining and returning our phone calls. Existing facilities, we haven't seen much of a lack of interest on your part or others in terms of looking at loans, just depending upon the workload, as you had mentioned. But as and we've got several acquisitions that we're looking at, a couple of our development projects, we've pivoted and we've adapted a little bit, but still bullish on the market, and our marketing is in place to existing owners. And you and I, as we are both out and present and upfront in terms of the industry, there's a lot of folks coming to us that now have some projects that they're maybe abandoning, not going forward with, or existing facilities that the owners are now decided finally that they don't want to weather another recession. And so we're looking at probably 3 times the amount of lead flow and deals that we were before. So I'll ask you, I know real estate is a finance, but put your investor hat on, since you are an investor as well. How are you approaching the market right now? And in your spare time, what does this look like on your end, and what do you foresee, and what areas are you going to be looking into in terms of existing facilities or development? What are the opportunities that you see on the horizon for Terry?
Well, we're still looking at mostly acquisitions. I mean, there's a couple of new construction things, in the windshield, but mostly still looking at acquisitions that make sense, that have some value add. Uh, and we're seeing, obviously, like you say, we're seeing more of them. But that we haven't changed the approach really at this point. We did have one that we were hoping to have closed this month. It was an acquisition, and the bank we were actually using backed out. I mean, great deal. All of us that are involved know the industry, and there's no concern there about us or our credit scores or liquidity or anything. I mean, it was a no-brainer. But the bank said, yeah, we're not going to do anything right now. And so owner financing may be an option as well that we've looked at, and not a tremendous amount's changed in our way that we're looking at deals and going after them. I mean, it's kind of the same as it was.
Mhm. Yeah, I mean, solid underwriting and building in, conservative projections and protecting yourself and building buffers works in good times, and it works during challenging times. And I don't think that you should change that, in my opinion. I think usually the good news is when something is going on in the economy that is not so favorable, then we get lower interest rates, and we have some flexible owners, and in some cases we have flexible lenders and financiers. Not always, just depending, as you had mentioned, you ran into some roadblocks as well. But at the end of the day, the underlying principles and your underwriting and all, everything that goes into the project should be solid, regardless of what else is going on in the economy, so that you can weather both. And that buffer is upside, as you mentioned. I mean, buying anything that is 90% occupied at market rates with no room to expand, add square footage, and you're in the same rental rates as your competition. That to me seems risky versus buying something with even a lower cap rate right now, that where you have the ability to add technology or increase occupancy, increase square footage, or what have you. That's how you guard yourself against anything that can happen in the market, in my opinion.
Yeah, you're absolutely right, and that's the way we look at it too. And you mentioned, when you said the word interest rates, it made me think of something. I just want to interject
Hmm.
that you know when prime rate, which is a lot of times banks use that index, the prime rate, it dropped within 2 weeks, less than 2 weeks, it dropped 1.5 points. I'm sorry, 1.5%. So 150 basis points in less than 2 weeks. And sometimes, borrowers feel that, hey, the interest rates prime rate just dropped 1.5%. So should my loan rate. It's not the case. The rate that you get as a borrower does not go in lockstep with changes like that, because banks have cost of funds that it costs them to make a loan. They've got deposits. They got to pay interest on those deposits and other expenses. So you have cost of funds that keeps you from necessarily having that rate drop the same amount. And we've had a lot of folks that are surprised or upset because prime rate dropped 1.5%. Why isn't my interest rate, that you're quoting me now, dropping that much? And that's why I just want to throw that out there. I mean, if you already have a loan and it's a floating loan and it's tied to prime, yeah, you're gonna realize that savings. But if you're working with somebody now and getting a loan, and or you've been quoted recently, just don't expect that, because it doesn't necessarily work that way. Like I said, we've had some folks upset about that, and I just wanted to mention that so that there's not a big surprise.
No, absolutely. And yet, if we open this up to questions, that would be one of the first is, hey, Terry, where's my discount? We
Exactly.
haven't seen it coming yet.
Exactly.
And so I appreciate you clarifying that and really making that clear to folks because, most folks think that the same thing. It's like the gas station. I saw the price of oil went up and immediately goes up at the pump. And if it goes down, it should go down. Well, it doesn't really quite work that way.
Hmm.
Well, Terry, once again, I know that you've just had your head down buried, and we appreciate all that you're doing to get those funds from the SBA out to folks, to business owners, and those of us that are in the self-storage business, and can't wait for the time when you get those through in the next round, and then get back to the primary focus, which is lending on self-storage. So, with that, there's a whole lot of folks here that maybe looking to get into self-storage for the first time. A whole bunch of us that have been in it for a while, and everybody has questions at this point. What can you do to tie a bow on us and give us a little summary of your take on the industry at this moment in time?
Well, the industry at this time, from what I can see, is still strong, and there's still a need for it. We mentioned some things here during the conversation that you wouldn't necessarily normally see. The industry sometimes has growth from unexpected places. Is what I would say. Good times, people buy toys, they run out of room. Bad times, they downsize. Got to have room. It's just been a very resilient industry that I've been in it for myself a little over almost 25 and a half years. And it's just always seemed to do well. Even during the Great Recession, some people may have suffered, but it wasn't nearly as bad as a lot of other industries. It's one of the better ones you could probably be in times like this.
Yep, I've been in other forms of real estate as an investor, and I have lots of friends that are in other asset classes in real estate, and many of those folks are really singing the blues right now. So yet again, I am thankful for the industry that I am in, that we call self-storage. So, Terry, with that, glad to hear that everybody is good and healthy over your way as well, and hopefully you are enjoying your time being at home, although you have had your head down. But appreciate you taking time to fill us in, give us an update on where things are at as far as Live Oak and the SBA. And looking forward to, once again, getting back to some sense of normality so we can have more fun conversations talking about moving forward rather than just catching up at this point.
Absolutely. Absolutely. I'd be curious to see what the new normal is.
Yeah, yep. I am too, but optimistic. So with that, Terry, once again, thanks as always. Have a fantastic day, and we'll talk to you very soon.
Thanks, Scott. I appreciate it. You have a great one.
All right. Take care. Bye-bye.
Bye-bye.
You've been listening to the Self-Storage Podcast, where self-storage investors come to learn how to launch and scale their self-storage business. Don't forget to subscribe to our podcast on iTunes, and of course, a 5-star rating would be much appreciated. And if you're looking to do an even deeper dive into the world of self-storage, head on over to our sponsor, selfstorageinvesting.com, and check out their entire suite of resources, from software, business plans, home study guides, live events, private money assistance, mentoring, and even how to apply to become a member of the Self-Storage Mastermind. So head on over to selfstorageinvesting.com and pull down one of the free guides to get you started. And as always, we'll catch you on the next episode.